Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So this morning it all started out where everyone was a little befuddled, right? You had China down 3% plus across the board. At that time, Europe was also down, making new monthly lows, and our futures are down 1 and 2 handles. And I think I tweeted, I'm like, what's going on here? Is funds coming here? Are people more focused on the Fed, that they're going to be doing 1 and 2 rate increases very slow? Because it just doesn't really make sense. So typically after the Fed day, you get some kind of trend day, so let's be careful and at least have our levels all worked out in front of us. And then by the time I got into the office to do the morning call with Brittany, the DAX bounced off the monthly lows, and our futures were up 40, 50 points in the Dow and 4, 5, 6 handles in the in the S&P, and you had to really think quickly. If you were short, there were levels to cover where it would blow out the right shoulder, and levels to maybe get long, because I came in flat. And there were definitely some things to do quick, and could there have been better action? It all depends on where you pick. So let's just get right into the charts. You look here at the chart of the SPX, and it blew through this trend line here. We've been talking about the trend line. You had a high here of 2134, another high here of 2121, another high here of 2115, and yesterday's high was 2106. So right away, when it looked like the fix was in early on, this is your cover point. You could have covered pre-market, you could have covered after, or you could have even waited for right here, I guess. And happened fast. And now, those who were talking about the head and shoulders top, which was valid, here, looked better there without the downtrend, probably should have readjusted into this move. Now, do I think that this takes us back to all-time highs tomorrow or the next day? I'm not sure. But at least now you know that perhaps you got to stick on the right side of this trend line for continuation. So I was giving a morning meeting, which I always do at 9 o'clock for the virtual trade floor, and as well as the prop traders in the trading group. And so many different traders, thank goodness for you guys, or hopefully you kicked butt. Everyone was focused on the IBB. Everyone was talking about the bios and the relative strength. And even yesterday, when they tried to be fugazi and get people out of their longs, the bios really couldn't go lower. And I've talked about this chart, talked about this channel, and put it on Twitter a few different times. You had defined resistance. Look at this defined resistance. Tested support a few times in the last 2 weeks, couldn't break below it, and then today, boom. And that happened well before the S&P went, so it gave you some appetite for risk, and now it closed at 377 above the high here, and very, very strong move. If you made money here, you deserve it. This made sense. As a trader, all you could do is be in things that make sense, and this showed relative strength above all moving averages. If you were short this and you cost average it up, do whatever the hell you do, because that's not the right trade in my book. This was a breakout long, and hopefully you did well. The Russell started off a little slower. Yesterday there was a little bit of a down day. I'm going to adjust my little microphone as we speak, because we here at T3 aren't so stuffy. We trade real time and we talk real time, and there's no teleprompter in front of me. I'm just telling you like it is. Came in here today. Some people are like, "Oh, Red Dog, Russell were a little weaker yesterday." We know the way the computers are. They try and throw you off a little bit. You look here at the IWM, and you'll see, yes, yesterday you had a bit of a down day, still above the 8-day, still above the 21-day. Most knew that this is your spot right here, okay, that would squeeze the heck out of a lot of people, and that's what happened, okay? And this is a relative strength point. The bears were saying that you were going to have this same type of situation where you broke through here and failed for some type of follow-through to the downside, but you know what happened this time? We held up, didn't really fail here. This bar was a little bit different than this one, and you broke out. So there you go. If you were in the Russell, the bio, and even the spiders, the way I made my money this morning was getting in the spiders in the first 5 minutes. You had this quick little move, and then there was a buy, there was a little bit of a bull flag to buy. I missed this. I bought in here, so most people saw me on the VTF get long here, and it gave me a nice trade. Okay, and now I'm still in the spiders, and we'll see what happens next. A bit of a pullback, nothing special, didn't break any retracement rules, gave you a bounce, and then just kind of floated a little lower into the close. But overall, this is your spot that you had to be so quick, and you had to be so calculated and so on top of your game, which is why I write my note every day so people have the levels. broke above this 211.33, which in my opinion was the downtrend spot, and you could have covered and saved money, and you could have got long and made money. And if you would have obviously went with the IBB or the Russell, you would have done that much better. Then you go through stocks, okay? Amazon, okay, look at that friggin' awesome move. Will Amazon be for real? Okay, this is your first real wide range bar that that really showed some power, okay, and closed strong with engulfing type action. You would think you could be long this for a move back to highs. We shall see. I'm long a little bit. Not great prices though. Google has beaten the heck out of a lot of people. This range has definitely battered and bruised anyone trying to buy here, anyone trying to short here, and now we're getting close to this spot. Engulfing bar, we've seen it before, but it took back all the moving averages. Maybe this could get above this in the coming sessions and work its way back to highs. We shall see. Apple, frustrating name's been frustrating for I don't even know how long now, since earnings basically. Today it didn't do much. Still not doing much. Market broke out, lagging the tape. Not much you could do here. Not much to even really on the long or short side. Still hanging in here below this. I think if you're long it, you're not in that much of harm's way. I wouldn't be short it just because it's just not a great stock to short no matter what. But I guess you'll see. And then tomorrow you'll see if it breaks above this trend line and starts to play some catch up, because it is behind. And PE-wise, the stock is so cheap compared to most things out there. It's been acting horrendous since this breakdown. Yesterday posted two charts. Facebook said it's in the game for a move back to highs. This stock cleared this pivot, held today where it had to, and looks really good, and at some point probably gets back to this area. LinkedIn, not as constructive as far as chart-wise, as far as relative strength-wise, cash flow trade-wise. Is it still in the game where it could break above this little price point and give you another trade? Yes. I actually lost money in this thing today because I was in it early on, and then all of a sudden I'm in the gym and I see that my position ran, and I missed this extra buy right here because I left. I was long it, and I said, oh, I'll be long it, and hopefully it gets up to that 219 area. So I was long it, and I would have loved to have been able to buy more here for this run, right? 217.50 to 219.50, $2. Missed that, and then all of a sudden, I checked it from the treadmill, or wherever the hell I was, and I was like, if this breaks above 219.60, it could definitely continue. So I bought more. I bought double from what I had here, and then checked a little later at 2 o'clock. I'm like, oh, it's still hanging out. Markets come in. It's still acting strong. Nice move. And then by the time I got out of my meeting and I came back, this happened. So I'm like, oh, I wasn't here to sell it or sell a portion of it, and I stayed with it, and it closed right back into this range. So if I would have just stuck with my initial position, it'd be fine, because I'd be right back to where I was, and I just would have missed out on the additional gains. But instead, I bought more up here, which has been pretty much the kiss of death. If you buy more, but I figured today's move, maybe you could buy high and sell higher. And doesn't mean it's game over. It just means that you got to wait for this move, if we're going to get this move, into the moving averages. And that's what happens when you play a laggard position. It's a little less forgiving. We'll see. What did Twitter do today? I didn't touch it once. Still doing nothing. And then, some guys are talking about the laggards. Can the laggards catch up? And we saw WYNN, which a lot of guys have been talking about, give you a little bit of a push. Same way here. It's like you have to be very careful. It's still a laggard and gave a little push, but look where it is in the scheme of things. So you go for a cheapy stock, and it could definitely come off the highs. And some people who paid up, you probably got a little hurt after it filled this gap. LVS, same type of thing probably. No, actually, LVS was a lot cleaner. LVS broke this key level here. This was your first move. This is when it held in there and gave you another move. So LVS actually acted better than WYNN. So, some cash flow type action back down here, and maybe there's room to there. I chose to go with a few airlines. Not sure why, but I guess, here's where it broke, wasn't involved. Here's where it broke again, wasn't involved, and this is where it broke out from, and now it's trying to hold there. So buying into this support maybe makes some sense. On a very active level here, trade-wise, held higher, kind of like the LVS and the WYNN, and if it were to break above this little spot, maybe there's some room to retrace. So, UAL could be worth a try, and this LUV was downgraded today and was somewhat priced in, turned up. It's been battered and bruised from up here to down there, you know, maybe a laggard type trade. And then you had some of the stocks had been on the move that we focused on earlier in the week are just basing and need some time. MBLY, you know, took the day off. It's allowed, right? After the move we saw this week, first spot was when I listed the chart right here, and then it cleared this. Then you did your buyable pullback, cleared it again. Today was a doji, so we'll see maybe tomorrow get a little bit more of a pullback. I think it's buyable. Tesla really didn't do much either, but how much could you expect after a 3-day move like you saw here where there was a buyable spot? So it did hold the prior breakout, so maybe with another day of inside action it can go. So doesn't mean it's out of the game because it had an inside day today. Some of these these smaller cap names or whatever these are called had bigger moves before the market, and today some of the market stocks played catch up. You go to something like even like CYBR, took the day off. Actually, this was a bit of an outside day. So if you were in it from when we talked about it here, maybe today was your sell signal, and you'll see if you can get back into it somewhere into the 8-day or maybe into here. But you know, ugly candle today. So this would have, if I was still long it from here, I would have gotten out of it there. I think I stopped playing it somewhere in there. FEYE was also long. This stock, best spot to have been long was right around here. And then when it cleared this, and then I was a buyer right there. And now with this topping tail, don't know if, you know, if you're shorted, it makes a little sense. It's extended, but these cute little shorts could make you real ugly because sometimes it engulfs it. But at this point, it did show a little relative weakness today. So at least if you were in it from here or here, your active trader could maybe take some profits. If you're looking for a cute short, this was your first signal that maybe, you know, it could happen for you tomorrow. Some guys made money in CMCM that I went over today. It went all the way up and came in a little bit, but still looks good. What did something like, what did WUBA do today? WUBA, I think, was down. Didn't clear the price point, and it's right on the trend line, so I'd be a little careful here. You know, these high-level bases, you know, sometimes high-level bases are vulnerable to false breakouts. At this point, this one doesn't look phenomenal. I would just wait. As far as some of the banks, Goldman Sachs, you know, right back to highs, held the 8-day again. Maybe Morgan Stanley follows along tomorrow. Let's see what Citigroup did. Little red dog reversal above the moving average. Still looks like it's trending. What did JP Morgan do? JP Morgan. Where's JP Morgan? Still looks good. So JP Morgan and Goldman had the best day, and we'll see if some of the other banks follow. So with all that said, today you had some clues that, you know, the fix was in and the U.S. markets wanted to be strong. You had deep red hours overseas, and as it materialized, as soon as something was a little bouncy, like just say the European indices off of those lows, we went positive quick. We had the right shoulder resistance to gauge against, and boom, took that out in the spiders very quickly. At the same time, the relative strength that we've seen in the bios and the Russell gave us, you know, big trades if you were ready for it to the upside, and a lot of people on the VTF and on the floor got, you know, rewarded. You see some high beta names acting a little bit better, some better than others as far as you could buy high and sell higher, and some still, you know, need to have a little bit more time. So, you know, if you missed out today and didn't have a great day, this type of action could loosen things up and, you know, create better trades moving forward. If you go home frustrated and your mom says to you, oh, the Dow was up 200 points, you know, did you kill it? And if you didn't, don't like be mad at her. She's just asking you a question. Those questions happen when your family sees a big day and they ride home on, you know, whatever it is, 10 wins, and they're like, oh, you're a trader, you must have killed it. And sometimes there are a lot of guys that shorted this move. There are guys that were short from yesterday that probably are still short that are going home hating life, and that's why I hate being short. You know, I'm glass half full. Listen, I understand, you know, stocks go up and down and you have to be able to make money both ways, but there are guys out there for the last 3 years, all they want to do is short. It's just not my style. Listen, in 2008 to 2009, I had my best year when the trend was lower, when volume was high, when the VIX was spiking. That was a time to be short. Now, you know, you could pick your spots and try to look for cute ones, but the better trend has been to the upside. You know, and lately in this range, you could make money long and short, but, you know, if you shorted, when it looked like it was going to break down, you lost. The same way if you bought when it looked like it was going to break up. I'd rather buy it and lose when resistance holds versus shorting on support and have things bounce. But that's just my personality. It's Thursday night. I hope you had a good week. Tomorrow I'm in Short Hills. There's no morning call. I'll write my note. My note's a little bit more abbreviated. And then Monday we start all over again. And it's a summertime. Make sure you are taking care of your business and have some hobbies and not sitting in front of your computer all day long, because with volume the way it is, even if things are moving, you're better off trading the first 90 minutes, holding positions, putting stops in, and doing something throughout the course of the middle of the day so you don't drive yourself batty staring at a bunch of green and red bars. I will be in Denver next week for a Schwab event. You can look at it on my Twitter. I'll be there live, but if you're not going to Denver and you're not invited, which is only a select few, you could actually sign up virtually and listen to me. Amanda Drury's going to be there, a few behavioral psychologists, and some other individuals that are pretty highly regarded in the market. And I'm just happy that they invited me, and I'll go. And then I'm going to run the mountains on Friday afternoon and Saturday with something that I like to do. Have a good one. I'll see you Monday. Bye-bye.